So if you look at UiPath, right, look at how the steepness is going down now. Okay. And if you compare these two, this is what's going to happen. And when it goes up, comes back, it checks back, and then moves higher. So there is no steepness in this one. So this is a much better stock than even CRM right now, because it's been basing for a while, and the steepness of 150-day has been flattened. Now, my assumption is this is gonna start moving higher from here on. Can't hear in case you're speaking. Oh, hold on, guys.
I can hear.
Yeah, everybody can. Uh, all right. So for CRM, my assumption is that it's gonna come back, and this is gonna flatten out. Does that make sense?
Yep.
All right. So I mean, we have many stocks like that haven't flattened out. Look at that. Google is that way, but again, Google is down here. So Amazon is horrible. Amazon is horrible. Look at that. I mean, it went to 150-day and got rejected. So uh, Apple is good, and Tesla is probably one of the worst. It just checked that 150-day. So it could, and one of the reasons we got out of Tesla is because many stocks, what they are doing is they're going up and coming back and checking back the 150-day. I mean, this went down below 150-day, a lot more percentage than many other stocks. So that's why I think we had such a big move higher. That's a 64% move lower from the 150-day. So can you hear now?
KP, yes, I can hear you now.
All right, cool. Thanks. All right. So yeah, so regarding CRM, that's what I think is probably a good trade. I did trade Boeing. I don't know how many of you guys took it, but during this period, and I bought it when it was breaking out. It did not break out, and it started moving lower. But look at how fast it came back. So I sold 202.50 here, and then moved them to 170 to April, and those puts are now down 63% or so. I think 150 to 50 cents. It was $1.50 and now it's 50 cents. So selling puts are the most profitable so far. That's what I have seen. All right. Any other tickers, or I can go through some of the tickers that were given already.
Hey, KP, before we go into tickers, right, can we touch base on that vertical, the multiple call options and put options trades that you make? I want to understand two
Okay.
things. One is, because I have some cash and I want to make the trade, but I'm a little bit hesitant to make the trade because I don't fully understand how you're executing. So for those kind of things, I don't want to get in unless I understand. I understand simple vertical call, vertical put spreads, which the only ones I'm making other than naked and covered calls, but not those multiple ones.
Yeah. So I mean, I am just trying them out right now, but they will be the most profitable ones once we get into a bull market. We are still, you know, basing it out. Most of the stocks are still basing out. So uh, let's.
Just you can explain one of your recent trade on a
Yeah, this
Tesla
is
or PDD, right?
PDD. Okay.
Either ones are the multiple call spreads that logic you have to explain.
Okay. Well, those trades are different from the ones I thought you were. Okay, let me show you this one. Um,
Like you sell 200, like one call of 489, and then buy, so like 100 of them you sell, and then you buy 200 of the higher call, and then again you sell the put, and then again you buy a put. So that's what I want to understand, to be clear in my
So
head.
there are two of them. This is the one that we did on when was this? Friday, 3/3. Yeah, that was on Friday. So this thing broke the downtrend, right? So let's look at, I sold 45 puts and I bought 58 and 54, 58 call spread. So 45, what do we have at 45? That's below the recent swing low, okay? And we know that this broke the downtrend. I'm using this, whatever I'm selling, whatever the premium that I'm selling, I'm using that to buy the 54 and 58 call spread.
So
So
is that an even number, like equal number of puts and calls, like, or
no, it doesn't have to be. Right here, look at that. I sold 50 of them, but I bought 20 of this. The idea is not to, I mean, here if you look at it, the open is 1200. I made 1200, but the net liquid is about 1800. So I have about $500 of debit in this trade, which is not a lot. So even if AAA does not go higher, even if it moves sideways, you'll the puts, whatever you sold here, that will the premium will go down. Even if it closes at 54 or even here at 50, this I won't lose a lot of money. In a bull market, this will be an amazing strategy, and I want you guys to learn this. We have done call spreads plenty of times, but when the market, like the market especially we have, it is very hard to make money when we have one up day and the down the next day it's down. So what we are doing here is using this premium to buy the upside calls. And
but when did you buy? I'm sorry, I didn't mean to interrupt. When did you buy that 45 put? Like you sold that puts, like when it started going up, or when it's actually on the trend line?
no, I started it after. I started on the well, I did all of it on Friday. Okay, so
Okay.
I think somewhere at this time. But
Okay.
once it started moving higher, that's when I bought the call spreads. Let's look at this. This is where I bought the call spreads. But I just sold puts during this period. But again, we don't really have to, I mean, we don't really have to worry about that. The only thing that we need to know right now is, because it broke the down. I mean, on this day, it would have been much better. But on that day, I wasn't doing much because of what happened with ACLS. I was just paying attention to that. I don't know if you remember this big drop. I wasn't I wasn't paying attention to anything else at all. But AA was on my radar on this day too, because I know that it broke the downtrend.
Okay.
One of the easiest ways to think about it is just sell the puts below the support. You don't even have to do this trade. Even if you do this trade,
Yeah.
that premium is
Even
yours.
if by selling by puts, we'll be in a safe spot.
Yes.
Okay.
But because it's doing so good, you would do this. And now if you think about this, right, you have you got 56 cents, and now this one is also making money, right? So you would probably make what, $4.20. That's about $8,000 on the upside, with only risking $500 for the whole trade.
Yes, yes. So if you just stay here for a second, if you can, you sold 50 puts of what is the strike? I'm sorry, it's also not a strike. What is the expiry date?
A month from now.
A month from now. So
Yep,
you sold
yep.
50 puts at 44, like when the strike is around 44, right?
Yep, 45.
Well, okay, 45. And then you bought 20 calls of what is the strike of the
So that is based on 54 and 58. These are the levels I have on my chart.
oh, and they all expire on the same expiry? All of
Yes,
them?
yes, it
Okay.
does.
1 month from now. Okay.
Yes, but one of the reasons I am also doing this is because look at all the metals, SGLD, RS. I mean these look. X did not do much, but there are so many metals. Look at this one, XME. That's the ETF. Even that one is doing really, really well. So metals in general are doing really good. And this one, I keep talking about the bearish to bullish move. This is the 150-day. It went up, came back, checked it. Now it's moving higher. So based on the backdrop of how metals are reacting, this could easily break this 58 and move much higher. If it does that, we'll sell this 54, 58, and we'll probably, buy 50, 60, and probably 58. And what is the other spread we have? And we can do this as long as it works. 58, 65 or 60, 65, whatever works. All this has to do is break 58 now.
So if it breaks 58, does it make sense next week to sell maybe 50 puts?
50, yeah, 50 should be fine, I think. I mean, it is still below the downtrend. Yeah, 50. Actually, yeah, below this level is good. Yeah, 50 is good. The idea for us is if it comes back, right, we can move these 50 puts to below 45 2 weeks or 3 weeks and without losing any of the premium if it
Okay,
comes
okay,
down.
okay.
Yeah, we can always roll it down to the next 30 days or 15 days so that you don't lose any money on it.
I think I understood this one. Now my my outstanding question is in terms of the margin, right? I know that 20 and 20 will cancel out, right? So you bought a lower one and you sold higher one. For that, all you need is cash.
Yep.
But to sell that 50 puts, right? Does it look for it's almost like 50 puts means what? If the stock price is 50, it's almost like 250K. Does it expect you to have 250K?
So there are different ways to do that. I mean, if you can either buy one of the lower, 245 and 40. What I mean by that is sell a vertical of 45. Give me a second. Yeah. So 45 and this will reduce, but again, you're not going to make as much money, obviously, right? I mean, you're spending some money to do this. Or you can also do, hey, where is I'm missing something here. Let me delete this. There are different ways to reduce the risk or the margin, but you would have to probably pay more for the what is it? The commissions. You can do 132. That probably works well without a lot of so for this one, you could probably do unbalanced butterfly. Okay. This is much similar to selling 45 puts. And probably do 48 maybe, or 47. Let's see how much we would get for it. Right now, this is 30. How much is that? 40 cents right now. Let's do 439. And we'll look at how much, what's your maximum. Okay. Maximum loss is 10,000. So you need 10,000 for just 10 trades for this one. Or maybe 5,000 if you have a regular margin account.
So let's just say if I have like, 40 grand or 50 grand invested in total stock and all, right? I can just simply sell 10 puts, right?
Yep. I mean, see, the maximum loss it says is 10,000. So that would be your margin.
Okay.
Yeah. I mean, there are different ways to do it. You can do 132. 132 will be more likely. Let's see. I mean, this is not accurate, because look at that. 39 is 7 and 20 cents. It wouldn't be. This wouldn't be right. I mean, this cannot be 20 cents. This should be much less than 14 cents or whatever. So you could probably do 132, or sometimes you can just do a regular butterfly. Let's see if we can do a regular butterfly. $46, $45, and $38. Look at 38. Let's see how much would that cost. It only gives you 19 cents. That's not good enough though. Yeah, I mean 132 makes more sense, I guess, in this case. Yeah. I mean, there is always an alternative for selling naked puts. And then whenever I'm doing a trade, ask me if you need an alternative for that, and I'll look for it. How about that?
Okay.
All right. Yeah, before I started recording, what I was saying is this market is much more like 2021 market, where selling puts were profitable, or the same 132 or 121, because even in the bad news, market is not going down. It's actually moving sideways, and on any kind of good news, it's popping a lot. So there is a good possibility that, based on the price action what we have seen, maybe this is done. I mean, we have a higher low and another higher low now. So if it can break this 431, I think that's all it needs to do for the bull market to start. And what I'm seeing is some of the stocks, they are doing good, but very few, probably 20% of them. If this turns out to be a bull market, these will move much, much higher. And what I am also seeing is that this has been a common theme. It goes to a resistance and moves lower, goes to a resistance, moves lower, and then this is happening again and again. I actually do more trades, to test some of this. Not RXTX, is it RXTX? Yeah, look at that. I mean, it went up, came down, went up. And this has been happening a lot. Every time I think it's going to break out, it's not breaking out. It's doing 2 or 3 tests at a minimum for it to break out. So there is still more time for the bull market to start, I would think. And look at, I mean, I always, let me show you the new share. I always look at these industries. I mean, some of these are doing, steel producers are number 2. Nucor, as I was showing you, STLD, RS, Nucor. Many of these stocks are really, really doing good. So it's not, the technology is not anywhere near here. I mean, there is still a lot of move for the materials. Okay, before I digress, let's go back to your list. So yeah, I mean, I thought ON would just stay here, but whatever happened with the Tesla investor conference, we have seen a huge move, down to a single day move down to, with ON Semiconductor, AEHR, and ACLS, and a bunch of other stocks. But I think it came back. So I would think that 72 is secure. I'll probably look into if I can sell some puts over there, or probably 132. Tesla, as I said, this is still in a deep downtrend. I still don't know what's going to happen. I mean, if it goes sideways for a while. And I was also looking into selling some upside call spreads one more time. But we need more volatility. The volatility has gone down in the last 3 or 4 days for Tesla. Sharp actually looks better now. But I would think this is about 11%. Yeah, 11%. That's much more than what I would buy a stock in. But it closed the gap. It's moving above, and the uptrend line is still intact. So probably call spreads are a good idea, or just sell put spread and see how it does. And I would think it's a better idea to sell these spreads a little farther out than 2-3 weeks away, because this market is still not there yet where we can do the short-term trades and make it work. Path, I think it still has sideways move. It is still steeper, right? So it could go up and come back and go up and come back a few times before it starts moving higher. This has to flatten out. It hasn't yet. UPST is not still looking good. I mean, market has bounced really, really well, and most of the stocks have bounced, that were crushed a lot. They have bounced a lot, and this hasn't. I don't like this. CRM, we talked about this. It will probably close the gap, at least partial gap, or it could at least come into, I would think, 175 or so before it starts bouncing off. But that's a big move, and this is still flattening out. Whenever the BR 150 is flattening out, a pullback is to be expected. I mean, that happened to many stocks so far. TTD, I really like TTD. It bounced on the earnings, came back to this 150 day, and it started moving high. It did not close the gap. The gap closes all the way down to right here, but it did not, which is a sign of strength. So gap close could be at 850. So this is a good one. DKNG, well, this is flattening out. I haven't looked at this chart for a while, but yeah, this one is looking better. Yep.
Hey, KP, the TTD and DKNG, are they good for, to add for long term? Because now that it has cleared off all the dust and then now it started rising up, right? So,
well, I mean, there is no such thing as long term, and actually this one is good, 8% only. So we can actually buy the stock. No, I mean, for me, this one still looks good. You could probably buy it here, but you need a stop loss. There is no such thing as long term. This is only 7%. This looks pretty good. This is only 7%. So yeah. Well, if you want to do long term, you can probably buy some calls. That's probably a better idea, and see how it goes. You will just lose the premium.
okay.
Yeah. We still don't know if what happens next week. I think we have Powell this week, don't we? Yeah,
Yeah, I think on
Amazon.
the 14th and 15th, I think.
Yeah, I mean this is still moving lower. This has a lot of work to do before it turns around. Just look at that. Google also the same. Steep. This will have to do a lot more work for it to turn around. PDD actually moved. One of the reasons I bought PDD is because it is the strongest of all the Chinese. Okay, but this move lower, obviously, that could also be because of the amount of move that has happened right here. How much is that? That's a 174% move in 2 months, 3 months. Yeah, that's why we got this pullback. But this is the strongest stock among Chinese stocks right now. I mean, look at the other ones. Look at Baba. It gave up most of the year's earnings. Actually, let's see how much big it is. It's a double, right? And looks like it did a 50% retracement. Let's look at PDD. I did not do that. And this thing is didn't even do 38% retracement. So I mean, this is very strong. I mean, if it wasn't stronger, it wouldn't have done a 170% move anyway. And the one thing that I'm not paying attention a lot are these. I think I should. Cummins or Caterpillar. I'm looking at them, but I'm not getting any good place to get in. Again, we had the alert on this day, but I want to see a little bit of sideways move and a breakout. There's no consolidation here. I can't get in. What's URI? This is a monster. And among the steel, ATI, look at that. Crazy moves. Well, that's all I have, guys. Any questions?
KP, I know you look at the charts and like you're more comfortable in forecasting the market based on what the chart speaks.
Yep.
But just what is your gut about like where the market is going to go next, right? Because when I look at the long-term chart, whatever
Yep.
the correction that we have is like insignificant.
Yep.
But although there is a recent renewed bullishness, is it really time for us to be bullish or to be extremely cautious? And that
Well,
2022 can potentially repeat.
Well, obviously, I have no idea what happens from now, but the way I am looking at, I mean, there are so many. Okay, all the technicians are bullish. Okay, all the fundamental guys, they are bearish. That's what I hear. But the stocks, I mean, there has been a huge change in the behavior until even last year, right? Stocks were going up and coming back down really fast. I'm not seeing that anymore. So that is the big difference. That's why I've been saying, it looks better to sell some puts and buy some calls, or sell some put spreads and buy calls. I think we are still in the very early stages of the probable bull market. Let me show you something. I was looking into this one. So this is S&P 500. Let me get rid of NASDAQ. Okay. So this is from 1970s. So that's a 12.5 years move. That's a 450% move. And then we got the 1987 crash. Then it went up 620% move. And it didn't do anything from 2000
KP,
to...
We're still seeing
2009.
the ATI chart, unless others
Oh,
are
sorry.
seeing-
Thank you. All right. I was supposed to share this one. Can you
Okay,
see this
good.
here? So I'm
We do.
getting, yeah.
Huh?
So, I mean, this is, each one of these is 12.5 years. So for 25 years, it went up. And then it this is more or less, waste of this is probably the best time to be away from the market during this 2000 to 2009, about 9 years or 8 years, 8.5 years. And then we got another 620% move. Is it possible that we get another, if this is a 25-year bull market, we could get, another big, so that here some people are saying that it's 620%, so we will probably see a few years of sideways move. Again, these are the things I love to look at them, but when we are trading every day, this doesn't matter at all for us. This is just for perspective. Whenever I look at the long-term charts, many of the times it contradicts what I'm doing at that time. I mean, right now I'm bullish. And I wanted to talk about this. So take it a little photo. So 1, 2, 3, 4, 5, 6, 7, 8, 9. These 9 days, right?
Mhm.
Out of these 9 days, my portfolio was down only 1 day. That does not tell me that market is bearish, which is absolutely weird. And that could also be because I have many positions where I sold puts rather than have a lot of long-term positions or the call side. And again, there is no point in even talking about where it's going to go next. So far, we are not seeing breakouts, so we are not in the bull market. But we are also not seeing breakdowns. So this is still in the digestion stage. The only thing that happened from here to here is stocks that went down a lot have bounced a lot. And there are very few stocks that have broke out and moved higher. And I really don't like the fact that metals are moving higher, and that's not what we want to see. We really want to see software stocks move higher. I mean, some have done really good, but there is still huge volatility. Look at this. This is a software company, right? Look at this huge volatility. That's not what we want to see. I mean, if you are in this stock, you will probably be, for us, when we buy low risk entries, right? That's really not helping in this market. Hold on 1 minute, guys.